into Domino's Pizza here. S&P's up 50 and a quarter, making a run towards those highs of the session. Right now, 27.82. The NASDAQ, as we pointed out, the strongest on the session, up 2%. And to Kevin's note as well, crude oil up another 23% here, bouncing off those lows in a volatile space right now, but fading a little bit here. They were just over 15 in June, back down towards 14, a space that is basically defined by the word volatility right now. So we'll keep our eye on that as well. But Landon, good morning to you, and thanks for joining us. I want to talk Domino's here. And if the guys could pull up my platform real quick on Domino's Pizza, first things first is this is the most, to me, defining V recovery that I've ever seen in terms of it's literally just a V on my chart after gapping up, looks like on earnings last quarter, and then, fading as everything has, and then fully recovered here going into this. So Landon, does the data back up this flying V, if you will, on my chart?
Flying V, I don't think I've ever heard it before. That is, if that's going to be one, that's it though. It's an incredible chart. They sold off about 25% off from their February highs, and now they've completely come back. They're back to all-time highs. Really a wild chart when you zoom out to like 2010 and up. It's been on an uptrend for quite a while, and it hit resistance for like a year and a half at 300, and it finally broke through, and now it's at 380. So a pretty wild chart. And when we look at Domino's, one of the things that we've talked about a lot on this show is the movement towards just general food delivery versus pizza delivery. I've said it a lot of times, but I think it's worth repeating when you're talking about Domino's is 5 or 10 years ago, if you wanted some food delivered, it was pretty much just which pizza chain are you going to go with. And now with, Grubhub, Uber Eats, Postmates, all those, you can choose just about any restaurant you want. And so it's really important to note that Domino's is kind of fighting that trend, and they're going with their own app, and they're trying to stay away from those others. And it may prove profitable over time, but, we're seeing that people are using the generic food delivery apps far more during quarantine than they're using pizza apps. Now, both of them are increasing, that's for sure. They're up quite a bit. I think that just general pizza delivery is up about 33% as far as our data shows, but food delivery is up about 160%, general food delivery. So yes, Domino's is going to take advantage of people staying at home and getting more pizza, but I think that you're going to get tired of pizza, and you're going to start shopping around on places like Uber Eats, Postmates, things like that.
Landon, I have so many points to make with you today. First and foremost, if you think about a company or firm that invented the digital and ordering through an app, and really the digital fast food business, it's Domino's. They were the innovator, right? I think this firm was innovator, and don't tell me that anyone will ever get sick of pizza, Landon. Come on. You're talking to people from Chicago. There's no such thing as sick of pizza. It's everything. Yep. It's everything good for you and pizza. No matter what diet you're on, it's and pizza.
Yeah, but you Chicago people, you're not ordering from Domino's. You're getting like a deep dish delivered from Uber Eats or Grubhub. I mean, you got to admit that.
It's true, guys. When I look at this, though, I think kind of combining both your points, though, Landon, if this is the case and some of these trends are, although they're rewarding pizza, maybe not to the extent that they're rewarding, some of this newer dynamics in terms of food delivery, does it add up in terms of this innovation? Did all the innovation pay off, and is it going to hold given the run that we've had over 10 years? I had the chart pulled up here on a 10-year outlook of Domino's, and when I look at this, it's been parabolic, and the recovery has been incredible. Is it sustainable? And when you're seeing this growth, is Domino's the one being rewarded, or is it just like you said, is it these other spaces and then Domino's off to the side?
Yeah, so I think this is I hate to say that this is a positive for a company, for any company, but this is, and it really is. It's kind of a rising tide thing, but it's not helping pizza as much as just companies like Uber Eats and Grubhub, but it is definitely helping pizza. The timing was almost perfect. They at least got all of football in, which is huge for pizza delivery companies. They did miss out on March Madness and NBA Finals. But now going into the summer, they're not really missing anything. People don't order pizza to watch baseball, and sports are kind of key for pizza ordering. So this is a lighter season for them. And so to miss out, they missed out, like I said, March Madness and NBA Finals would have been nice to get in, but at least they got all of the NFL playoffs and Super Bowl and all of that in. So that was key for them. When it comes to like a quarterly outlook, it's not great. I think that the current quarter that they're about to report, our purchase intent data is kind of weak on it, but the quarter that is currently going on, which they may issue guidance on, is very, very strong because of this stay-at-home quarantine situation. And so they only had about 10 days of the quarantine in the quarter that's being reported. So that ended on, I think, March 22nd. And so the very end of the quarter that's about to be reported had a little bit of the quarantine in it. Otherwise, it was business as usual. We know that they've reported that same-store sales were up. We're showing that purchase intent is off just a little bit, but that current quarter, the one on the far, far right, is very strong. It's up a lot. I think it's up 32% year over year. That's what the pace is. And it's all because of people are staying at home and ordering more food. And so I think it's going to be an iffy quarter for them as far as the report goes, but I think the guidance could likely be very strong.
And Kevin, dive in here because I'm hearing a lot there. Guidance could be strong. We know that the street's been focused on guidance. I compare this to Netflix, though, because I think, a lot of this maybe is being priced in terms of, excitement around this name, given the recovery that it's made and seeing the response that we saw with Netflix's strong quarter. Who kind of knows how the street's going to digest this? But he also mentioned something I think is very interesting with regards to the correlation of maybe pizza ordering and sporting events with so many of these things being canceled. Some of this stuff's just being delayed till later on in the year. Is that potentially a 6-month opportunity down the road where this demand is just being pushed off, Kevin?
Well, I think there's several things to unpack there. First and foremost, you saw Domino's come out with a national ad campaign talking about the fact that they're hiring. So that's one really positive. Remember, this show, we go through a lot, the winners and losers in this new economy. Domino's appears to be one of the winners. The stock shows that, and their ad campaign talking about them trying to hire more people shows that. So, when I think of Domino's Pizza, and you're right, Landon, it's hard to talk about a national chain for pizza in a town like Chicago where we have such a regional bend on pizza. That being said, I compare Domino's a lot to McDonald's in the fact that if you want to order the absolute lowest price pizza and get it delivered to your house, it's usually something like Domino's. I mean, their prices are just lower than any regional pizza or small chain or things like that. And that's one thing that no one can touch Domino's on, is how cheaply they get the food to you. So they have a lot of positives going on in this, and obviously the stock trading up here at close to 380 shows that, guys.
Building on that, Landon, he's talking about the price point. How does that impact the sentiment? Is there a perception of kind of less quality with something like Domino's? Is that okay because the amount spent is maybe lower than some of these more, deep dish style that you're mentioning maybe in Chicago, whatever the regional style of pizza might be for whatever area? Is there, does the consumer give Domino's a pass on that because it is a little bit cheaper, easier experience?
I don't think that you're going to compare any kind of food pizza that's being delivered to a local pizza restaurant. They're always going to lose on that battle as far as quality. But when we look at happiness, no, people are not correlating Domino's low price with low quality. And I think that they're going to order pizza that they like, that tastes good. And then price is obviously a consideration, but you're not going to order cheap pizza if it tastes bad. So Domino's has very high happiness, and I don't think that that's an issue at all. And I think that you get down to a situation where people like maybe a couple of different pizza chains, and they know that Domino's delivery is faster. They're maybe a little bit cheaper. They added a lot of stores in 2019 in order to cut delivery times, and that's shown in the consumer happiness. And so, yes, I think that it's strong for Domino's, and I don't think that there's a perception of low quality at all. No.
And we've covered so much here, Landon. So kind of put it all together. You talked about this idea of maybe a weak current quarter, or the one that they're going to report, and actually a strong quarter that we're actually in right now that they're going to be guiding for based off your data. I'm seeing 141% implied volatility with 2 days to go. Over almost actually a 10% move with a $35 market maker move on the platform right now. Stock's up $12. We saw what happened with Netflix after, absolutely a blockbuster quarter. Does LikeFolio, are you guys kind of sitting onto the side watching this one? Do you have a feeling one way or another? Or does the data say you got to do this or that?
You know what? If it didn't have that V, I'd probably be pretty bullish. But I think a lot of this is priced in. It has snapped back to all-time highs, and it is surging right now. And so I think that the expectations are extremely high. And you bring up a great point. You got to look at Netflix. I mean, we knew it was going to be a great quarter, but so did everybody else. They come out with fantastic numbers. They're up after hours, and now they're off. And so I would be pretty cautious with Domino's. I personally am probably going to be on the sidelines. Again, LikeFolio data says the current quarter is a blockbuster, but the one being reported is maybe kind of light. So there's too much of a mixed signal for me. But with implied volatility so high, if you got some people that like to be a short on premium, this could be an opportunity. Just make sure you stay risk defined.